This is a video on how to design a mutual funds portfolio. But this is the section of a video, and in this section we would do a build active portfolios. We have already selected mutual funds for our portfolio, and this section would figure out how to allocate those funds so that they meet our target allocation, and it goes over a shortcut portfolio and also the one that it does a better job of allocating to our targets. Okay, let's continue. I'm Sarwan Agrawal. Okay, let's continue from here. Okay, so this is we are going to do this video here, how to design a mutual funds portfolio, and this section of video discusses how do we build a active portfolio when we already have selected the funds we want to use for implementing this active portfolio. Okay, let's go to the next section here. We have already discussed these section first 6 sections here, and this video is going to this section is on building active portfolios. We already know the funds, we all know the construction rules, and we would build a active portfolio using these funds we selected here. Let's continue. So portfolio design by an engineer will do after that. Let's continue. Let me share frustration with you. We had picked MGIAX for large value fund, and I tried to buy that at Schwab, and it is available only to institutional clients. So I could not buy that fund even though it said no fee and no load on their data sheet. Let's continue. So for this exercise, we'll go with the same fund with B shares, which charges load over the years. Instead of charging front load, it charges them 1% a year until the load has been paid in. And if you sell the fund too soon, usually before 5 years, then there is a back end load of the load you have not paid already in. Okay, let's continue. So this allows you to get in without a hefty load chart in the front. For large value funds, and look through the premier list, and there have a for large value funds in that list are either have a 3 stars or fewer stars. So those are, I don't go with a fund which have 3 stars or fewer stars, but it's up to you. You might feel comfortable going with a fund with a lower star rating. Let's continue. If you care to just diversify, you can use this ARTIX, which is a foreign large blend value fund. Okay, we will try to look for a large foreign large value fund, and this one is a foreign large blend fund. Okay, it's a decent fund, ARTIX. Okay. As far as I know, this fund is available as of today, which is for 13th. Let's continue with building portfolios here, and in this section we will do what? Build a shortcut portfolio. So we will, and then in a later section we'll build a 60-40 portfolio to meet our ratios. Okay, then we'll dry run the portfolios built so far. So we'll dry run these two portfolios. Okay, let's continue. Let's do a shortcut. Continue here. So we know these are the selected funds. Okay. IWIRX for large cap growth fund, and BVEFX for large cap value, and VUVLX large cap value fund, and we get 2 value funds and 1 growth fund. And ICSX is mid cap growth, Oak Mark International is foreign large growth, and MGIAX, actually BX, is our foreign large value. Please continue. And TGLMX my intermediate term bond funds, and so is MWTIX is intermediate. Let's continue here. Target allocation is US is 42%. That's what we are trying to achieve. Non-US is 18%, and fixed income is 40%. Let's continue here. The US funds are, these are the 4 funds we have. So we need 42%. I got 10.5% each to all the 4 funds. Another thing is that the first 3 are large cap funds, and fourth one is a mid cap fund. We also are trying to achieve a ratio of large cap to mid cap and small cap of 3 to 1. So that serves me just fine. I got 10.5% each in all four funds, and it gets me 42% to. Let's continue, and we already have a allocated allocation to US funds. Now we will do a non-US funds. Okay, and we have these two funds for non-US, Oakmark and MFS fund here, and this is a need 18%. I just give 9% each. Okay, 18% to two of those, 9% each. That's a shortcut portfolio. Now again, we have US for 2%, non-US 18%, and fixed income is 40%. And we already have this US and non-US allocated. Now we will do a fixed income funds. Okay, we have two funds, a TGLMX and MWTIX. Need a 40%, SK 20% each to both of these funds. Okay, let's continue now. Our portfolio now is IWIRX 10.5. These US funds all 10.5%, and these international funds all 9% each, and the non-US 9% each, and the bond funds are 20% each. That makes my easiest way to build a portfolio given a set of funds we selected. Okay, let's continue. Our portfolio is US is 36% from the X-ray, and non-US is 22%. And in fixed income is 40%. That's on target here. Okay? And others are 2%. So equities is 58%, and we were looking for 60% and 2% other. Okay, so we got that one here is short than our target is. Okay, and also large cap is 73%, mid cap plus small cap is 27%. That ratio is fine. Large cap to mid cap and small cap is, we're looking for a ratio of 3 to 1, and that's close enough. Okay, let's continue from here. Okay, another thing is here, US is not as much as we care for. We're looking for 42% and 18% here. A ratio of the two is 7 to 3. So this ratio is not 7 to 3. Okay, it's less. Non-US is more than our target is, and US is less. Okay, let's continue. So this portfolio has less US allocation and non-US allocation, and more in non-US allocation. So this fund portfolio has less in US allocation and more in non-US allocation than we had planned. So it's not the portfolio we planned, but we'll do it. This is a shortcut portfolio. Okay, let's continue. Okay. In this section, what we'll do, we will build a 60-40 portfolio to meet our ratios. See, we used a shortcut portfolio before, and which had too much of the non-US and not enough of US allocation. Now we would build a 60-40 portfolio that does have the proper ratios, okay, are the ratios we are looking for. Let's continue. And after that, we would do a dry run of the portfolios built so far. We will do a back test of the portfolios. So first we would need X-ray data for the portfolio. Okay? And this is what we have. We have, these are the funds we're considering, and this is their allocation. Let's say US is that much, non-US and bonds and cash and other, and large cap, mid cap, and small cap. Okay, let's continue. So we would need this X-ray data of the individual fund, and to properly build up our portfolio. Okay, let's continue. Okay, so now we are building a designed portfolio, and by trial and error I got this following allocation in 20 minutes or so. Let us continue. So first we did IWIRX 14%, BVEFX 13%, VUVLX 13%. Okay, let's continue. And I got Nicholas Fund 8%, and Oakmark International 9%, and the MFS International Fund is 4%. I got this smaller than the Oakmark is because we were using B shares, they are expensive shares, than the A shares on load waived basis. Let's continue. And TCW fund 31%, and you may use double line total return fund instead. Okay, let's continue. I use that fund instead of TCW total return fund. Okay, so we use it, but TGLMX has a longer history, and the manager of double line fund used to manage TCW total return fund. Let's continue, and that's a Metropolitan West fund 8%. Okay, let's okay now do X-ray of this portfolio we just built, and X-ray of the portfolio is US is 40.59%. We were looking for 42, so I got a 40.59%. US is non-US is 18.24%, and I was looking for 18%, and I got 18.24%. Okay. Equities are 58.83%. We were looking for 60%, so this is what I got, which is close enough. Okay. US non-US ratio is 2.225, which is within plus minus 0.1 of the 70 to 30 ratio. Okay, let us continue from here. Fixed income is 34.57% for the bonds and 5.17% for the cash. That's 39.74%, which is very close to 40%. Other is 1.44%. That's where the issue is, that I don't have 42% here. Some of that is in here. Okay, let's continue. And large cap is 74%, mid cap is 23%, and small cap is 3%. Okay, and our ratio large cap to mid cap plus small cap is 74 divided by 26 is 2.8461. That's within plus minus 0.15 of that 3 we were looking for. That's close. That's fine. That's close enough, and this ratio is close into what I was looking for, so we do meet our target allocation within the tolerances. Let's continue, and these all are close enough, so it's a portfolio that meets our target allocation. Okay, here's the growth chart as of data was as of 12th August 2014, and 129 months is the history I got, and within that month time frame it annual return was 9%, 9.04%, and standard deviation was 10.12%. So standard deviation was slightly higher, and this is the allocation we had been talking about so far. Okay, and I ran this data on 13th August, and my tool used data as of yesterday, 12th August. Let's continue. Okay, here's the comparison of the portfolios we have so far. So design portfolio, which is this square, filled in square, this is right here, had a higher return and slightly higher standard deviation. Returns are on this axis, and x-axis is the risk. High return on a slightly higher risk. Okay, and this is the shortcut portfolio. This is the one we built shortcut which had a excessive allocation to international funds and not as desired allocation to lesser allocation to the US funds, okay, US stocks. So this portfolio is better than this one apparently, and this is the passive portfolio which has similar risk situation, but lot lower returns. Return is lot lower. This is the highest return, and this is the lowest return. This is the passive portfolio. This is my Standard & Poor's portfolio, which is 100% stocks, and it had a high return as expected, and also had a lower high risk as expected, and lower Somehow it even got a lower return than the two portfolios we built from the selected funds. Okay? So our select this design portfolio, this one, and also the shortcut portfolio we have has outperformed and Poor's 500 and with a lot lower standard deviation. So this is about 9.5 or so, and that's about 16. About half the standard deviation, we are outperforming the standard Poor's 500. Okay, let's continue. Okay, let's see some questions here. Does this portfolio so constructed maintain its defining characteristics, which is bonds allocation, the U.S. and non-U.S. allocation? We we did went through such a large length to get it right, and does it maintain stay right? Okay, let's continue. Answer: no portfolio is cast in concrete. These are all moving targets. In fact, Morningstar updates data once a month in the beginning of the month. As such, when we use this data, it's already out of date. So, okay, wow, that's bad news that we have built a portfolio on out of date data. Okay, let's continue. However, large funds portfolio is fairly stable. When the funds have get too much assets in it and they're rather stable, a manager takes months to unload or build up a position. I suggest that you revisit allocation once every year. Okay, that also gives you opportunity to consider more promising funds. So don't worry about it. It's fine. It should be fine. Okay, it stays. Let it deviate slightly from the allocation we cooked up. We decided, and let's revisit the allocation again in a year or so every year, and do your rebalancing at that time. So this is my reallocation once a year, and at that time we would get it right again. Okay, let's continue. Let's continue. I ordered a booklet from Ken Fisher about that 15 minutes retirement solution, and that's just that 70% strategic allocation. That's something we already discussed here. We discussed only the strategic allocation. Okay, then they use a 20% tactical allocation. Okay, and 10% individual securities. So Ken Fisher recommends using this allocation. Okay, let's continue. So we already discussed the strategic allocation, and that's what mutual funds portfolio is about. Okay? And for tactically, you probably will identify sectors likely to outperform the portfolio. And for individual security, there is plenty of research available. I don't use either, so I stay with the mutual funds. Okay? The mutual funds are a collection of a pool of funds managed by someone who knows what he's doing, at least who's supposed to know what he's doing, has experience in managing portfolios. Okay, so for tactical, you probably will identify sectors likely to outperform the portfolio. And for individual securities, there's plenty of research available, and I don't use either. Okay, I just stay with the mutual funds. And here's suggestion: follow only what you understand. Okay, so stay with your within some your comfort zone. Okay, that's my suggestion. Okay, okay. Let's continue. Yeah, the advisor used to say, hey, let me invest 90% of the money in a reasonable manner, and you can keep 10% of your play money, and so where you can go have fun and try out your ideas. Okay, but it's up to you, your money, and I go with 100% tactical allocation, and none of the fancy stuff like tactical allocations are individual securities. Okay, let's continue.